All right, so what we're looking at here right now is the market going lower and lower. Hey, George. The market's going lower and lower. So we're going to start off here a little bit differently, looking at the opportunities. Hey, George. All right, good. The one thing we have to focus on in a situation like this, as the market is going lower, is what I think would be continuing with the trend to the downside, right? And when I see that, I always like to go with the quote unquote trend, but there are situations where the market bounces or could reverse, right? And so that's what we're seeing here right now is the market bouncing off of the roadmap, which is these zones. Now, I have a lot of members, a lot of people that I talk to. I don't know exactly who has the roadmap and who does not. So feel free to fill me in here. The roadmap, the intention of the roadmap is twofold. One is to avoid a bounce, and if the market reverses, to protect you from going against that massive amount of what's called profit taking, right? And for me, whenever I see the price landing in the roadmap, I always ask myself, will it go through it, and how fast or volatile the market happens to be. The reason why I say that is because when the market is slow, the first zones are more important. When the market is fast, like I'm going to add here the ATR here to the chart, average true range with a setting of 4. And remember, for those of you who may be new, come here to template, save, and then save as default. And the reason why I do that is because the next time that I bring up the average true range, it's always in a setting of 4. What we're looking at is the last 4 bars, the last 4 candles. That is telling me what I can expect moving forward in time within the next 4 to 8 bars. So the goal of using the average true range is to say whether or not the market is slow or fast. And as you can see, as soon as it breaks through the roadmap zone, let me just move this up here, it means that the market wants to go lower. Now, I don't know how much lower it's going to be, but at least for me, it tells me that we want to go lower. So that presents opportunities. The opportunities could be taking it short as soon as it breaks the roadmap zone. In this case, taking it short because it broke the zone is not holding. Another option would be if the market comes back and then breaks like this. That tells me that breaks this low. It tells me that even though there's a bounce here, we're still going lower. So use the roadmap. Expand this out here. Use the roadmap to your advantage to first, as a filter, when it lands here and then bounces, you're saying, okay, let me just wait a little bit. This may reverse. And then once it breaks, it tells me that the roadmap zone is no longer, I would say, important or that important, that there's not enough traders there stopping it and we want to go lower. Anyone have any questions on that? Okay, great, Wes. Thank you, Sean. Sure. So with the bars, meaning how to move them up and down, Ari, there's a couple of ways that we can do that. So the first, obviously, is you can left click and drag on NinjaTrader like this. You can also do this, right? And remember, if you do change anything, the F here means focus. It puts everything back in focus. Now, if you want to bring the chart up, hold down the control key on your keyboard, click on the black part of the chart, and then drag it up like this. And you can push it left and right like that. The 4 bars to add the indicator, Ari, you're referring to? The ATR indicator. Right click on the chart, choose indicators, and ATR, since these are all in alphabetical order, we come here to A's ATR, right? Since I already have it added here to my chart. You double click on it, and it appears down here in the bottom section. So double click here, it appears down in the bottom section. The period of 4, usually it's defaulted to 14 on most charting platforms. You update that to the setting of 4. And once you do that, you click apply if you want. And then you come here to template. You click save, and then save as default. Okay. Ari, let me know if that was a question that you wanted me to answer. That's what you're asking there. The ATR is at 5.25. Now, you have to kind of take this and adapt to what the conditions are. If the ATR, the average true range, is at 5, what that's telling you is that every candle averaged out is about 5 points. So the next candle could go up or down 5 points from high to low. If you have a stop that is 1 point or a stop that is 2 points, on a typical trade, just the random movement of the market moving up and down, it's going to take you out of the trade with a very small or tight stop. So look at that average true range, the ATR, to determine if you're using the roadmap or the trade scalper or the Atlas line. You have to really ask yourself, will a 1 point stop keep me in the trade? Unless you have another reason, another stop or another idea to get you out, it's not going to keep you, it's not going to save you or help you. You're just going to constantly get stopped out. So just remember that the average true range here is really a good indication of the type of stop, the type of target that you're going to use, as well as should I even be taking the trade. So with, if you have a small account, maybe trade the micros. But if you're not willing to have a stop that is a little bit larger under these conditions, then obviously wait until the market slows down or changes. That will really help you. Because really the goal isn't to have all these little stops. And really the goal also isn't to have these large stops where, a large stop is going to just kill you, take you out. So that's not really the idea. The idea is to balance this out. Now I have the Sonic. I know some of you have the Sonic. Some of you may not have the Sonic. But when I look at the Sonic trade, I take a look at the target and I take a look at the stop. And you've probably seen this in the videos where I don't really want to have an entry where the stop is so overly large compared to the target. So in a situation like this where you see if you're using this as the stop and I see this as the target, this tells me how much room, really it's the amount of room that I have. Do I have a lot of room? Do I have a little bit of room to make money? Can I make at least 1 or 2 points from this 4-point trade? Or 4-point movement, I should say, 4-point movement. So take that into consideration. If you were going to take this trade short right here, consider how much stop you would incur, right? It's not that much. 76, 78 is 2 points compared to how much target you may make, which is 4 points. So that to me is always in the back of my mind. Because if you don't have a lot of room and the market is slow or the market is fast, you have to take that into the consideration. Does that make sense to everybody? Now, the other thing I also want to suggest is that maybe the first signal that you see, if you're using the Sonic or the Trade Scalper, maybe the first signal, short or long, may not be the right one to go. I know sometimes it does work, but when you have a strong market and it's in a trend up or trend down, typically the second, third, fourth is a much better, almost convincing move that we're continuing in the same direction. So here is the roadmap. If you remember what I said, you may not want to go short just yet. If it breaks, that means that there are not enough traders here to the long side able to hold this position. In this case, it landed in the zone and it started to pull back off of it. So if you're thinking about going short, this is an opportunity here to go short. If it breaks the roadmap zone here by a few ticks, maybe two ticks, 3 ticks, that would be your stop. At the same time, think about how much distance as far as your risk is involved. So remember, it lands in the zone. The idea is to wait, not to go long because it's on its way up to the zone. It's blue. If it holds, now you can go short and take it down. This could be a pullback like this, and we can still be going lower for the day. Now I know that we have this government shutdown. I know that we have this situation where the tariffs and everything is kind of all over the place. So we're going to see some movement, some volatility, and that's good. But if the volatility in the ATR is so big, let's say you see it at 10 or 8, those are some really big moves. I mean, those are really moves that if you're wrong could really hurt you. So just consider that. It's not for everybody, obviously. And if you are going to trade under those conditions, just extremely pinpoint the stop and the target. Know where your stop is, whether it's the Sonic or just above the roadmap or below the roadmap in this case. Just pinpoint it. Really pinpoint it. That way you're not getting killed, okay? So here's a short on the Sonic. I see my stop on the Sonic, which is here. Okay, and I see my target. You have to always consider if the trade is wrong and it reverses, it could really be a huge loss. So it's perfectly fine to wait for a small retracement like that, small pullback, and then take it lower, because that way you're really controlling the amount of risk. So use a limit order, place your limit order a few ticks or a point or two. As long as it doesn't hit your target, then the trade is still good. The longer the trade does not hit the target, or let's say it's just flopping around, going against you, going a little bit in your favor, going against you, that's when you say, I need to get out of this trade. If you look at most of the signals, most of the trades, the winners almost always go in your favor. Almost always. So the trades that are typically harder, or the ones that are losing, are the ones that stay longer against you, or go immediately against you, or go sideways. They don't do anything. So just consider, if I look back here a little bit. Sorry, you hear the doorbells and the chime. Let's see if I can get rid of that with other charts I have in the background. But if you look here at almost every single trade, as soon as it fired off, it went immediately in your favor. Fired off, went in your favor. This one fired off. It took a little bit longer to go lower. So the trades that are winners, it's very clear, they almost always go in your favor. But if you ever get caught, let's say that you're in a trade, you get stuck, or you get caught where it's going sideways, the longer that happens, I really think that the less likely it's going to go in your favor. It may go eventually, but it's almost as if the longer you're in a trade, you're subjecting yourself to risk. Questions on that? Yeah, so the Sonic trade, let me just expand this out. So the Sonic trade right here, to go short, if you look at the target, I think that this is a little bit, I mean, it happened almost instantly, right? So you have to jump on it. But look at the stop and then look at the target. So the most recent ARRI trade on the Sonic was this one here. But I would wait and have it pull back just a little bit. So that risk to reward is a little bit more 50-50 on the equal footing. So I'm not sure if anybody took this trade here to go short, but in my perspective, even though it was a winning trade, it's often best just to try to get a couple of ticks better in case the risk to reward ratio is upside down. You okay with that, Ari? Anyone have any questions so far? Want to learn more? Visit daytradetowin.com and get started with a free member account, which includes access to our trials, including the ABC software. Start learning the right way by using price action and avoid using conventional indicators. We offer unique strategies and proprietary software, including the Sonic system. Join Accelerated Mentorship and get instant access to all our software. Join our family of traders and let's get you set up in the next training.